Hey, what's up ICT traders? Good to see you back here again. In this video, I want to share something with you. And this particular thing I want to share with you is very, very powerful, especially those of you that are very, very careful with trading the ICT Killzone strategies. So I want to show you some of the reasons why Killzone strategies sometimes, I said sometimes, mark my choice of word, doesn't work. Because a lot of you people think the Killzone strategy is a strategy that is supposed to work 100%. No, it is not like that. There are situations that you will find the Killzone strategy not working. Until it happened to me this morning that I remembered that there is this guy that asked me this particular question. Let me show you the question. This was the guy that chatted me on WhatsApp. He said, "Sir, can you make a video when and how do you decide to use the London Killzone strategy or just a normal trade?" Which is a very powerful question. I promised that I was going to make a video explaining that, but then I couldn't have the time to do that until it happened this morning. But then we're going to go through some of the reasons why sometimes your Killzone strategy will not work and how you can improve yourself. So let me show you this particular trade. Today is Monday, the 9th of June, 2024. And this is what I saw on my chart. I'm actually trading EURUSD. I did all my analysis, checking DXY, which is intermarket analysis. DXY is simply what we call the dollar index. So price had something very, very interesting. Very, very interesting right here, guys. So look at this. I checked DXY, and this box anyway is what we call the Asian range. For those of you who don't know what exactly is the Killzone strategy, we have three different Killzone hours. We have the London Killzone hour, we have the Asian Killzone hour, and then we have the New York Killzone hour. But one of my favorite is actually the London Killzone hour. What time does it occur? It normally happens from, I normally use 6:30, but sometimes you can find it 7 a.m. London time, mark my word. London time, 7 a.m. London time to 10 a.m. London time. It is just like 3-hour window. All right. Between this time and this time, there is a specific setup that you're supposed to see and then take trade with it. Sorry, this video may be a bit longer because I'm trying to explain it for those of you who don't know what the Killzone hour is all about. So this happens most of the time like this. You know what we call the power of three concept? I'll make a video explaining that in a separate video, but then it is basically something like this. If I go to session breaks, you see normally price starts the day from Asia, and then it transits to London, and then it closes in New York. That's how it happens on almost everybody's chart. Just like this, Asia, London, New York. All right. So the way it happens is that if you have Asia, which we normally call the accumulation stage of the trading day, if you have a daily candle, Asia is mostly known as accumulation. That is why we call it the Asian range. So we have this particular indicator that normally delineates the open of Asia and the close of Asia. This is called the dead hour, this time of the day. Nothing happens here. This is normally 0 GMT, right here, 0 GMT, or mostly from 10 p.m. London time to 12 a.m. London time. That's basically when the market is starting in Asia. So we have this indicator called the Killzone, Asian range, and Killzones. Let me show you. It's right here on TradingView. You can see it here by these guys called NSR Group. If you click on it, or you can make it your favorite by simply clicking on this asterisk, then it will be right there for you to select it at any time. So if you select it, it will automatically delineate this for you. So this is a separate financial day. You can see this session break gives you, this is the entire trading day for this day, here to here. So we have the range of Asia. So we want to take trade during the Killzone hour by what we call the Judas swing or fake breakout. It's something very simple and straightforward. So what we normally do is that we will expect to see price gives us an indication that it wants to go in a particular direction. But then we want to see that price either sweeps the high of Asia, that is within this box. After the box starts Frankfurt, and then we go into London. Frankfurt is in Germany, and then we go into London. So look at this. So if we have price pushing above this high, even with a slight price movement, we consider it as a Judas swing or liquidity sweep. And when do we expect to see this? During the Killzone hour of London. I just hope you're understanding. We want to see it happens during the Killzone hour of London. So if we sweep above here, boom, it means we are about to create a fake price movement. This is what we call the Judas swing. So that those people who are breakout traders will start buying, and then they get trapped into what we call the buyer's remorse. It trapped them, and then price quickly move in another direction. This is the manipulation stage of the day. And this probably would be the high of the day. Most of the time, the London session or the London Killzone creates either the high of the day or the low of the day. So this is what happens during the Killzone hour. If you still don't understand, you can go to my YouTube channel. Just go to the playlist. You will see Killzone hours there. So what happened? I'm using DXY for example. What happened today that pushed me into going into the trade was because I saw this. You see this thing called the new week opening gap end walk. According to ICT, it is called end walk, new week opening gap. And the truth is that price doesn't leave this guy. Price doesn't leave this guy without fully feeling it before it goes. Every time you see this gap, price comes back to feel it. You know why this gap happens in the market? It is mostly because Friday market closes and Sunday market opens. Within this place and this place, there was a massive price transaction that left this level. The exchange rate from here to here has been affected. All right. So price cannot continue here. It will be lagging. Let's say yesterday price of 1 GBP. If you want to get 1 GBP, you need $1.5. And then the market closes, nothing was happening. From that day, from that yesterday evening to morning, price went to 1.7. So you see, price had to jump from 1.5 to 1.7 to meet up with the new price that is happening. So that's why the gap happens in the market. All right. I hope this explains a lot. So when we see this, we want to see price to come and close up, give it the balance liquidity there, because some people were trapped here before price will go up. So that was the only reason why I was considering bearish. If not, price was actually massively bullish on the higher time frame. I don't want to do business with that. It is because of that knowledge that I went into this trade that I'm about to show you on EURUSD. I hope this explains it a lot. So if you go to EURUSD, let me show you the trade I went into. So I came right here. I was actually intending to go bearish because price is massively bearish. But then let me show you what happened. So this is what we have on EURUSD. Truth be told, I even asked my community guys to go for the buy. Why? Because I saw this thing. Let me go to the 4-hour time frame. I want to show you everything I did so you will see that I am not just trading haphazardly. I'm trading with knowledge. If I go to settings, session breaks, I take it out. What happened was that I saw price traded into this all-time fair value gap. I didn't take the trade haphazardly. I knew what I was doing. I saw price went into this guy. Even though I was bearish, I was having confidence that price will give me some backup, at least for the shortest time. Then I saw the setup on 5 minutes. Let me just be a bit faster and then show you what is happening. So when I saw it, guys, it was this area. I saw price sweeping below the low of Asia, and this is it. Price shifted structure here. Normally when we take the trade, after the sweep of liquidity, we wait for a shift in market structure. After price normally sweeps liquidity, it shifts structure mostly in the lower time frame. We check 15-minute time frame for the price movement where the sweep of liquidity happens, and then we drop down to lower time frame to look for a change of character chart. All right, or what we call a market structure shift, whichever one you want to call. If it is working for you, just use it, guys. So that was the reason I said, okay, guys, we saw this happening. I was even very, very confident that, okay, at least we may deliver to the high of Asia. That's normally the target. When we take it from here, we target the high of Asia. And I told them that, guys, this is a nice point for entry. I said it. And the target is going to be here. Why? Because we have swept liquidity below after hitting what? After hitting 4-hour fair value gap, sweeping liquidity, and now we have shifted structure. Everything was precise. I know what I'm doing. Market structure shift. I haven't told them that, okay, I have a prop firm account I'm trading. This is it, 200K challenge account, first stage. I am on this particular stage now. This is the first stage of the account. 8,000. This is the profit I've made so far, about $8,000 on it. I needed to make $20,000 on it. So I am watching it. I said, okay, if price should come back to this area, what exactly is this area? This is a bullish breaker block. Why? Because price have pushed below here at least a little bit. Let me put it correctly so you can see it. This is a breaker. Price has pushed a little bit below here, clearing liquidity, and then boom, crashing to the upside. So I said, okay, I would be in this trade if price should come back to my breaker block. Price came back, guys. Price came back. And that was how I was in the trade. It started going in our direction. It was supposed to give us at least 25 pips. Yes, 25 or 26 pips, just the high of that. 25 pips is good, very good. 1:2.5 trade. So I saw this happening, guys. So when it came here, I said, okay, I'm almost half of it. Since it is a Killzone hour strategy, I am breaking even. I actually broke even, but then something happened. Price started coming back to our entry. I don't know what happened. Definitely price was looking at other side also. If you go down, you will now see why it is happening or why it happened. Price actually pushed lower to touch the bullish order block, this order block. So that was why price further pushed and couldn't respect our Killzone strategy. So one of the reasons is when you are visibly seeing a particular massive trend and then you are going against it. Sometimes the Killzone hour will not work for you. All right. So this is a scenario. The sellers decided to take over immediately. Even though we were at discount, the buy was okay. It is a discount area, premium at discount, but price had to give some time to rebalance before taking up. So that was the reason why we got stopped out at break even. Obviously, it was at break even. I got stopped out. I even told my community guys, you can close your EURUSD trade. It is at break even. Protect your money. Of course, I have to protect my money because I am taking trades with conscience. All right. I'm very, very careful with what I'm doing when I'm taking the trade. So price came back, got us removed here. But how about days that price are in line with everything? Price action is perfectly with everything, just like this one. Let me show you. On Friday also, there was that particular scenario. Price had worked with the Killzone strategy. It worked. We were bearish. Remember, I told you, massively bearish. And then price did this, sweeping above the high of Asia. All right, creating this fake breakout and then delivering to the low of Asia. Mostly from the high of Asia to the low of Asia. That's how the Killzone strategy works. All right, this one from the low of Asia to the high of Asia. Of course, you need to always use knowledge within the Killzone hour to take the trade. So two things that makes it when you are trading against an obvious, all right, an obvious market direction. So you may get some challenges most of the time. Let's say you are seeing massive downtrend and then you insist that because price sweep liquidity below the low of Asia and you're taking it to buy, it's not rational. Sometimes you have to look at what the overall trend is also doing. Secondly is wrong timing for entry. So these are the things, if you don't know how market structure should be, or if you don't know how shifting market structure is supposed to be done, you will get stopped out. And this will lead me to the next video I will show you valid market structure shift and invalid market structure shift. At least I'm taking so much time explaining this. Let me close from here, and then in the next video I will make another video explaining this. Thank you guys for watching. See you next time.